right, for more on what is next for international markets, let's bring in Rebecca Patterson, former chief strategist at Bridgewater. Rebecca, great to see you.
Great to see all of you. Happy St. Patrick's.
Happy St. Patrick's. Nice screen there you got on.
Thank you.
In terms of allocating, the next dollar, would it be to U.S. or would it be abroad?
If I'm looking at a 1 week or 2 week trade, probably abroad. But I'm a little surprised you all haven't spent more of this first 6 minutes on the April 2nd tariffs that are coming, that are going to be bigger than what we've seen to date and are going to be aimed at the rest of the world. That doesn't mean that we can't see a decoupling continue for some time, but it is going to be a pretty big headwind. I take your point earlier. China's tilt in this latest stimulus towards the consumer is a pretty big deal. It's not big in size, but it's big philosophically for President Xi to actually say, okay, we're going to help the consumer. The other thing they said they're going to help is technology and the stock market. And we know historically China has used state-related bodies to intervene and support their own market. So even if they get hit with tariffs, do they do enough there to provide an offset? And maybe this is a low volatility, but a stable-ish place to be while we go through this policy uncertainty. Maybe. I am nervous about the rest of the world being able to decouple on a sustained basis. I think what we've seen so far, primarily, profit taking on the U.S., repatriation, foreigners taking their toys home. Their capital went home, and that's what weakened the dollar and lifted those markets. I think that's been the biggest factor driving this trade. That's finite. Once they rebalance, it's done, unless we continue to get new positive catalysts.
So in your view, it is uncertain as to whether or not Germany's stimulus plan will outweigh the negative impacts from tariffs, for instance, or China's stimulus will outweigh the negative impacts.
The German stimulus, I think, is actually a much bigger deal than what we're seeing in China, relatively speaking. What they're doing is a structural break from history by loosening the fiscal constraints, allowing the government to spend significantly more money, especially in defense and infrastructure. And what we know from history is when governments do this targeted fiscal stimulus, it doesn't get priced in all at once because the capital keeps rolling out over a period of years. So I do think there is a sustainable trade in European infrastructure and defense. It won't go in a straight line, but it probably has some legs to it. I mean, years, not quarters or weeks. China, I'm a little less certain about because they have so many structural headwinds, demographics just being one of them. And the tariffs are just going to make sustaining this latest bounce hard. We can spend a whole hour on the Plaza Accord and the possible new version of that. I don't know if the viewers today want to spend a whole hour with us on it, but that's a whole nother can of worms.
Rebecca, it's Karen. Let me go back to Germany because this is such a massive shift, right? So you talk about for the next week or two, but I mean, it's a much, much bigger shift than that. Can you isolate where you would think about Germany versus some of the rest of the European markets?
Yeah, so, if come April 2nd or around that date, we get this new wave of tariffs, that's obviously going to include Europe. President Trump has made that very clear. And you get a pullback in some of these markets in Europe, that might be an opportunity to average into a long position. In terms of where I'd go in Europe, look, over the next 6-12 months, personally, I'd rather be a little bit more on the defensive side. So looking across Europe, markets like Switzerland and the UK tend to have lower betas. They tend to be a little less volatile, a little more defensive. And they also offer the valuations and lack of ownership that the rest of Europe does. Germany itself, though, I would be looking for any dips in some of those big infrastructure companies, things like a Rheinmetall, which I know has already rallied a lot. But just as an example, those sorts of companies that'll benefit from this spending in the years to come, I think it will have legs, just like the Chips and Science Act, just like the Highway Act in the 1950s in the U.S. and defense in the 1980s. These things ran for years.